Britannia is set to post its Q2FY21 numbers, and it is the first FMCG company that is going to be posting its numbers. Now, Britannia, if you go to see in the last couple of months, and especially since the lockdown, has been outperforming other FMCG companies and other consumer staple companies. So even this time around, we are expecting a similar performance from Britannia, and Britannia will be continuing to be the fastest growing consumer staple company in Q2FY21 as well. Now, let's look at the numbers. In terms of numbers, we are expecting the revenue to be at around 3,527 crores, which is a 15.7% jump. So you could say around 16% jump in the revenues of the company. While the profits are also expected to see a nice surge, a nice jump of around 24%, and they'll be at 498 crore versus 402 crores on a year-on-year basis. Also, obviously, we are going to see an improvement in the margins of the company, and the margins are going to see an expansion of around more than 200 basis points if you see. So it is 18.92% versus 16.1% on a year-on-year basis. So surely we're going to see a nice expansion in the margins as well. Now, volume growth, very important number, like I always mentioned for FMCG and consumer staple companies, we're expecting a 14% volume growth from the company. Now, this volume growth is mainly led by obviously the strong demand and growth that we are seeing in biscuits, bakery and dairy, while obviously this is mainly led by the in-home consumption, which has been a trend since the lockdown has started. So that trend is still continued a bit. Now, obviously normalization of inventory pipeline is also something that is leading to a good volume growth, as well as overall the market share gained by the companies will lead to a better volume growth, and we're expecting a 14% volume growth. Now, in terms of obviously we have seen Britannia is going to continue to benefit from the in-home consumption. So obviously the strong growth which we're expecting in biscuits, bakery and dairy, that is going to be there, but this time it's going to be at a decreasing magnitude, a decreasing pace, and that is mainly due to obviously how we are seeing that hawkers have opened up again. We are seeing that overall restaurants are opening up, things are coming back to normalcy, so people are going out. So obviously the in-home consumption trend is still there, but now it will be at a bit of a decreasing magnitude, a lower magnitude. So that is what we are expecting in terms of the overall demand terms, so that is something we're going to watch out for in terms of management commentary from Britannia as well. Now, overall, the EBITDA is expected to be strong. We're expecting a good margin expansion. This is mainly led by the muted raw material inflation that we are seeing in this quarter, plus the cost saving measures by the company, and overall the operating leverage also, which is by the operating leverage, which is leading to a strong EBITDA and a margin expansion for the company. So that is something that has surely pushed the company's margins and EBITDA this time. So all in all, we're expecting a good set of numbers from Britannia, continued good performance from Britannia, and obviously, in terms of factors, what we are watching out from the management, and in terms of commentary of the demand trends, like I mentioned before, the raw material price outlook, the cost outlook for raw material cost outlook is going to be very important. So this time it was inflated, but muted inflation, raw material inflation, not much of impact on the margins. But going forward, what is the trend that they're expecting? Are they expecting a price inflation? What is it? The outlook over there is something we're going to watch out for. And lastly, any new product launches and what are their marketing spends is the important factors we're going to watch out for from